Welcome to Finance with Avery. In this video, I want to give you an analysis, review, and overview of STEM stock, ticker symbol STEM. STEM is a very interesting stock, very interesting company. I'm very much looking forward to continuing investing in this one. I do have a position in it. I'll tell you about that, tell you about the news about the companies, the financials, and really get into it in this video. So let's jump right into it. So STEM is like a software-based company with a focus on energy. But there's way more than that. I mean, that's just like a simple blanket overstatement. We're going to get into it here. They are involved with the energy storage systems, hardware, ongoing software platform, and professional services, and solar asset performance, monitoring, and control. The company was founded in 2009 and is headquartered in San Francisco, California. The company recently went public a couple of years ago through a SPAC, Stark Peak Energy. The SPAC, special purpose acquisition companies. If you've been investing for a couple of years, especially, right around 2020, there was a lot of SPACs going on. That was a hot moment right there. And it did like a lot of the SPACs did, with this price. It ran up. Let's go over to it over here on the chart. I have a lot of tabs open because I have a lot of information to give to you here. So yeah, it ran up, as you see right there, started around that $10 mark, how SPACs do, the special purpose acquisition companies. And it ran up to, 40 something dollars right here, $46. It went up high and then, bounced around some and went down. We'll go over, where it's been in the past couple months, past year and everything like that. But I just wanted to show you, yeah, it did the typical almost, I don't know of any SPAC that didn't almost do this. I'm sure there's some, but yeah, it ran up, went down, ran up a little bit more, and it's been down since. So yeah, and with STEM, they became the first publicly traded smart energy storage company when they went public through that SPAC merger with Stark Peak Energy. So that is very interesting right here. This company really caught my eye, and I've been invested in them heavily this year. Currently, with my position in STEM, ticker symbol STEM, my average cost is $5.54. with a current return right now of 19.72%. That's unrealized because I haven't sold any of that right there with my average cost at $5.54. And I'll pull this up right here on the screen so you can see it. I have been buying this stock right there in April, you see, and also in June and July. I definitely went heavy in June when it was around that $5 mark, $5.50, around $5.30 or something like that. It was definitely under $6, and that's when I was doing most of my buying in June while it was under $6, and that's why I'm currently up right now. It is kind of coming down, so I'm really interested in this company, where the price of it is going, because I want to add more to my position. This is one of the smaller positions in my portfolio right now currently. However, I want to grow this position very much more. So yeah, and it's going to be one of the I'm pretty much focusing this one as one of my non-dividend stocks that I want to have a large position in, because most of the stocks in my portfolios pay a dividend. I love great solid companies that grow and pay a nice dividend. Either they're growing slow and steady or, still growing pretty fast. I really like that dividend. I like that, return to investors right there, that thank you for holding the stock, being part of the company, whatever you want to say like that, getting that dividend. I really like that. And whether it be reinvesting in the same company again or using that dividend for another investment. But STEM, of course, is not on that level right now. They're not paying a dividend. This is a growth stock. They're still in that growth trajectory. I'll show you the financials and everything. So, but this is a position that I want. Basically, it's like one of the main non-dividend stocks that I want to continue investing in and wrap up my position in. And one of the main platforms of STEM is Athena. That is their AI, artificial intelligence, and ML, machine learning platform software right there that helps with the utilization of energy. And this is very exciting right here. Athena is STEM's trusted enterprise platform that unlocks flexibility across the clean energy value chain by sitting in between distributed energy resources, DERs, the utility, and grid controls. Athena makes it easy to maximize energy asset performance and investments. As you see right there, it has over 1 billion hours of leveraged data. Data is like a currency. You may have, I don't know if you've heard that saying. That's definitely a saying I've been saying for years. You ask some of my friends or something. I know this is like a huge platform. This is YouTube. This is all over the world. You're like, who are your friends? I don't know. But anyways, I've been telling people like data is the new currency. Not like it's going to take over the dollar bill or, or anything like that. But data is a currency. That's how companies how ads are so relevant, how they're so, profitable with companies like, Facebook doing so well and Alphabet, Google, and just data is a currency. And having a lot of data is very important because you can learn from that. You can grow from that. You can utilize, you can margins from that. It's one reason why Tesla has done so well. They have so many hours of drive time data. That's how they're going to be able to grow that, self-driving platform so well, and everything else going on with their car with the safety features, all that data of how people drive, what they do when the weather's like this, what they do when this many cars on the road, just so many things you don't even think about, that this data right here behind the software that is thinking for you about and doing it for you. And that's how Athena does, because With STEM, what they do with the companies and with their platform and their software, they help companies utilize their energy to, whether to be, to increase their energy output, to decrease their energy output, depending on the weather, the grid, and different in utility rates. So they maximize basically energy efficiency for companies. So companies don't have to do that. Companies definitely want to cut costs, of course, and one way you could do that is through the energy you use, because energy can be expensive. Definitely. You have a platform like this that helps you save money, and it definitely will, help the bottom line for other companies. And STEM has some very major companies that are using their platform. Let me tell you right here, STEM has some very major companies. Like, you're watching this video right now, you may know what STEM is, like roughly, or a good bit about STEM, or maybe you don't. You're like, what is this energy company? What is he, and you're learning about it. That's awesome. But the companies that this company works with, that are their customers for STEM, with STEM, you've definitely heard of them. Let me show you here. Among their customers are several huge corporations, including Apple, Home Depot, and Walmart. Those are major corporations. I mean, Apple is the most valuable corporation in the world based on market cap, so it's trillions of dollars in market cap. It even says it right here in this article. The fact that such heavyweights utilize its technology largely validates STEM and its technology. And here are some other major corporations that use STEM, and it states right here on their website, over 30 Fortune 500 companies use STEM. Right here, you've got Sheraton, AMC, Albertsons, Gap, UPS, Adobe, Intercontinental Hotels and Resorts, R.R. Donnelley, Whole Foods, which is owned by Amazon, Granite, Owens Corning, and Meta Platforms, which owns Facebook, Instagram, Oculus. Yes. So major companies are using STEM right here. And this isn't all of them. This is just what's highlighted right here on their website. And I talked to you about the couple on the article right there. It also states right here on their website, achieve sustainability, revenue, and resilience goals. Corporate demand for clean energy is growing exponentially. As enterprises scale their energy strategies, an adaptive, intelligent infrastructure is needed to seamlessly integrate disparate assets with corporate control systems and the grid. At STEM, we help corporate customers install and operate smart energy storage systems, maximizing savings, increasing revenues, and achieving resilience and sustainability goals. Our Athena software automates the optimization and management of battery storage and other resources. I mean, that is awesome. I mean, there's like a lot of great keywords right there, but that's what they're doing. It's not just hype. I mean, look at the companies that are using them right here. Maximizing savings, increasing revenues, clean energy, intelligent infrastructure, sustainability, automation. This is the future. This is technology right here. And you mix technology with energy, two very important things that help driving countries, companies forward in progress. It's a combination. It is a very powerful, interesting combination for sure right there. And so, those are some of the major corporations that are using STEM and some of the reasons why they probably chose to work with STEM. That is a major stamp of approval right there for a company that just recently went public. Yeah, it's been, founded back in 2009, but, just, pretty much ramping up to go public and everything. So it's really getting on the platform more, really getting out there more. And it has this validation right here from huge corporations. And this article right here also states that STEM's utilization of AI to make electricity use and utilization of renewable energy more efficient will transform it into one of the most successful companies of the future. I'm not saying this isn't financial advice. I'm not saying buy this company, it's going to be huge, it won't go bankrupt. I'm not prophesizing or saying anything like that about this company. Yeah, they have major, customers and everything. That doesn't mean, they're just destined for success. I don't want to hype up this company too much. I am really excited about this company and this stock. And those are some of the reasons why, who they work with and what the actual company does in their software. Definitely. But I'm trying to tone myself some down. So this is not financial advice. I'm not screaming, go out and buy this stock or anything. Me personally, I'm going to continue to ramp up and increase my position. But let's get into it over here. So on Simply Wall Street, according to their Snowflake analysis, they state that STEM is trading at 56.9% below their estimate of its fair value. And they also state that the earnings are forecast to grow 65.4% per year. So you see it on the graph over here. It's really leaning heavy towards future growth and being a value play right here, kind of. And health of the company, has a little, something right going on. Past, there's not much of a past. Like I said, this company's only been public for a couple of years, so it doesn't have a lot of data to go, to look at the past historical data. That's one thing about companies that have been around years to have to their advantage. You can look back 5 years, 10 years, decades of data to see the trajectory of how companies have grown, how much, stock they're issuing or how many buybacks they're doing, their cash flow, just different ways, a return on invested capital. There's a lot you can look at with previous data. But, with a company like this, there's not going to be a lot of previous data, only being public a couple of years, and no dividends, so nothing to really score there. And with the risk analysis for STEM, they state that it has a volatile share price over the past 3 months. And yeah, that is definitely true. Let's check out the share price here. So yes, year to date, STEM is down 25.95%, almost 26% right there is down. For the past 3 months, it's actually up 56.50%. You see how it's been bouncing around though, coming up here above 6, going down. It went above 7 recently, now it's coming back down. So for the past month, it's up 16.96%. Past 5 days, down about 5.65%. This is based on it closing Friday, July 28th at $6.62. Went up a little bit after hours, $6.63. But yeah, you see how it's down for the year right here also, down 41.57%. It's almost been a year right here, year to date. We went over that right there. So yeah, for the past 3 years, it's down 32.17%. And since inception basically of the stock, it's down 31.40%. Like I stated, it's only been around for a couple of years right here. So there's not a lot of data right here, but yeah, like I stated, it came out as a SPAC, went up really high, went up to above $40 over here, and then just kind of dropped, leveled off. You tried to kind of get back up there, fall some resistance, leveled off. Trading right now, went below the 50-day, 200-day moving average. So it's trading below the 200-day moving average currently, and slightly above the 50-day moving average. So yeah, let's jump into some of the financials of this company and look into the institutional investors. And so with the financials annually here, you look at the growth in revenue. 2020, 36.31 million. 2021, 127 million. 2022, 362.98 million right here. See how the trajectory right there is going up? Very nice. Like I say, only a couple years, but it's going in the right direction. Gross profits going up, negative right there in 2020, going up in 2021 and 1.25 million, and then in 2022, 33.09 million. Okay, and you have operating income. Like I said, this company is still very much in the growth phase. They are spending a lot of money. When you're in that growth phase, you got to spend a lot of money. You rarely come out profitable in the first year, 2, 3, sometimes more than that. So being profitable really quick for a company, I mean, like, things have to really hit right on all kind of different levels and just have the right financials in place already. Like, a lot of things have to be really almost like, even companies that are doing extremely well right now did not start off profitable. The Teslas, the Amazons, things like they went unprofitable for years, near bankruptcy even, for Tesla and Apple, a lot of these major companies almost went bankrupt at times, and were not profitable for years. So that's just something to almost expect with a growth stock that's in, especially in the technology space right there. But one good thing about the technology space could be the margins too. And so that's one thing about growth stocks in general and growth stocks in the technology sector is that you can go years not being profitable, not making, making profit. Yeah, you can make money. The revenues can look really nice, but the costs can look really, really rough as well too though. So yeah, something definitely just to keep, in the mind right there when looking at these stocks and analyzing them. But let's go over to the balance sheet, because I do like this right here, that STEM has more total assets than total liabilities, and they have for the past couple of years right here. You see in 2020 they did not. 205 million assets, 383 million in liabilities. Then that changed right there. 1.19 billion in assets in 2021, 524 million in liabilities, and then in 2022 went up in the right direction as well. Total assets 1.42 billion. Total liabilities went up as well, but still less than the total assets. Total liabilities at 869.73 million, and more current assets than current liabilities. See a little graph right here. Just like I say, only a couple of years. It's going to be very interesting to get more data from this company, more earnings, and they're actually going to announce earnings on August 3rd, 2023. So here in a few days, they will be announcing earnings right there. Very interesting to see how that goes. And over to the cash flow statement right here. You see the cash flow is kind of, got some negatives going on there for sure. You see the in cash position kind of bouncing up right here and then going down. One thing, you can also break it up quarterly, which I like to do as well, to look at to see how what's been going on quarterly. You see things pretty much going in the right direction quarterly as well. Definitely like to see that. Go over to the income statement quarterly. All right, so now let's check over the institutional investors and STEM right here, and you see the growth right here in institutional investment. You see the way it's going up right here, steadily rising each quarter right there, with recently there being a 5.76% increase in institutional investments in STEM right here. So that is nice to see. Some of their top holders, top buyers right here, top buyers for STEM stock institutionally, you got Citadel Advisors, Wellington Management, Invesco, Two Sigma, Fidelity, Morgan Stanley, and a few others right there. And top sellers here, you have, see, I haven't heard of some of these right here. Helion Holdings, excuse me if I'm pronouncing that incorrectly. Nuvin and Point72, Barclays, heard of that one. And new institutional investors in STEM right here. Cohen and Steers, Mizuho, Blackstone. All right, let's see who exited here. Electron Capital, Telemar Asset. So you have some that exited as well. Some of them have never heard of a few of those either. But that's the institutional investments in here. What I do like to see is an increase in the institutional investments. Institutions get more comfortable, more, analysts covering is the company, things like that. Because like I say, this is a newer company. You first kind of come out, you may only have a couple analysts covering you, if even that, maybe one or two. And then you get more analyst coverage, you get news more, you get more financials, and institutions start to feel more comfortable. Like, okay, let's throw some skin in the game for this one. Let's throw some money at this stock. Let's see where it goes. And you see the increase, and it becomes more comfortable for sure, and more confidence in the company. So an increase right there in the institutional investments. And over to the analysts right here on MSN Money, there's 16 analysts on STEM with an analyst recommendation average of buy. You have 7 strong buys, 3 buys, 5 holds, and 1 sell, and an average 12-month price target of $9.27 right there. So that's the increase of where it's trading at now. And over at the Tip Ranks analysts right here, they have 9 ratings right there with an average 12-month price target of $9.31. So a 40.63% upside from where it's currently trading at. The highest price target is at $15 and the lowest price target is at $4.80. I don't have the paid membership of Tip Ranks, so I can't see some of the information, see it blurred out. It's definitely interesting to see who the analysts are that are giving the recommendations, what their ratings are themselves. Right here we see a couple. We see Brian K. Lee over at Goldman Sachs, 4.5 star rating, $11 right there, buy. And you got Guggenheim right there, $11 buy. Another, 5-star analyst right here with a $12 price target of buy. So yeah, very interesting right here. Analysts, I'm not saying, analysts are always right. Definitely not. It's not saying like, oh, analysts think it's going to go up, buy it, or anything like that. It's just one of the things to add to an analysis in a review of a stock for sure. And earlier this year, STEM notated back on March 3rd, their board of directors approved a stock buyback program. And so they stated this program grants the company permission to repurchase $500 million worth of outstanding shares, and also states that highlighting confidence in their business model and market position, this buyback authorization allows STEM to acquire up to 81.1% of its shares through an open market purchases. So that is awesome right there, that they are already, like I said, a pretty young company that is wanting to buy back more shares. When a company buys back shares, that's showing confidence in, their company. They're like, yes, I want to own more of the company. And also sometimes it can mean they think the company's stock is undervalued. They think it's trading too low. And that's also a boost of confidence as well. They're like, we're going to buy back more of these shares because, our company's trading too low. We're doing great things. And a lot of investors don't recognize that because some investors aren't always on top of things. That's why price action moves around so much. The movement of prices of stock depends on so many things, macroeconomics and microeconomics. Things that are out of control of a company move stock prices, and things that are in control of a company, the financials, things like that definitely move stock prices as well. And you can have things like this happening where, stocks become undervalued, overvalued, overbought, oversold, things like that. But with a buyback right here, what this does with a buyback, as a simple example, so a buyback makes your position in the company more valuable. It increases your position in the company and makes the shares you own more valuable. When I say you own, me and you own retail investors, anybody that owns the company. So as a simple example, let's state that a company has 100 shares and you own 10 of those shares. So that means you own like 10% of the company, right? Just real simple. All right, let's state that over a year or so, the company buys back 50 of its own shares. So now they only have 50 shares right there, but you still own those 10 shares you own. You didn't sell anything, you just held. So you own 10 shares, and now there's 50 shares available of the company. So that means you own 20% of the company. So the shares you own are more valuable now because there's more percentage of the company. So that's just like a real basic, simple example, but you get what I mean right there. So when companies buy back shares, it increases the value of the shares you own. It can increase the price of the shares you own. It often does do that. When companies buy back shares, the price of the shares move up right there. And that's something that major companies do as well. Apple, the most valuable company in the world, they are really big on buying back shares. So yeah, it's just something very interesting, something I definitely notated. And I was like, I definitely got to add that in the video. So Now I want to jump over to some of the news with STEM. A lot of the news are with analysts, price targets and things like that. But it's also, this company has been featured in a couple of interesting articles, the articles that kind of hype up a stock, but they do have things to back it up where it's like, oh, I see what you mean right there. And STEM was featured in this article about the next Magnificent Seven. The Magnificent Seven of stocks right now, it's the ones that have really driven this market up this year, that have like led the market to go higher with their, with the amount that their percentage of in the S&P and in the NASDAQ. So you have, companies Apple, Google, Alphabet, Facebook, Meta platforms, Nvidia, Tesla, Amazon, and Microsoft. Like that 7 right there. Yeah, that Magnificent 7. Sometimes you get 8. You could throw somebody else in there, AMD, different companies like Netflix maybe. But yeah, that's the Magnificent 7 typically when you see these articles about them. And so they're saying the next Magnificent 7. Who could it be? So you got companies right here. And you know who lands on this? STEM lands on this. Right here, very interesting. Down here, yeah, STEM lands on this. I read a little bit about this article earlier because of the huge customers that STEM has right there. So yeah, that's one reason why I landed on this article, and I thought that was very interesting. Another article that STEM is featuring is about 7 more stocks, but not the Magnificent 7. There's 7 stocks to target for triple-digit returns in 2023. I'm not too sure STEM's going to be giving triple-digit returns in 2023. Maybe, who knows? This is a long-term hold for me. I'm not trying to get, rich quick or get 3-digit returns in a few months or anything like that with STEM. This is one, if they keep going on a trajectory they're going on with their growth, with their financials, with who they're working with, then, this is going to be a great long-term play. And that's what I want it to be for me right there. I'm planning on holding STEM for years. So that's just me personally. But yeah, this STEM was featured in this article. It states that STEM has developed an AI-based platform, Athena, that helps companies manage electricity flows from renewable energy. The company explains that Athena's advanced AI and machine learning capabilities analyze a variety of real-time data from solar, storage, and electrical vehicle infrastructure assets against external factors like weather, utility rates, and grid constraints. So yeah, that's how I was mentioning earlier in the beginning of the video what Athena does and STEM and everything like that. So yeah, very interesting. Doesn't that just screams to me like saving money, cutting costs, good for the environment, like so many different positive things right there that this company could bring and is bringing. It's not could, they're doing this already. They're already doing this. So yeah, very exciting right there. Really, man. Now I'm okay. Let me calm down. Yeah. Anyways, so yeah. And it also states right here in this article, also validating Athena's appeal is the company's rapid growth, as its top line soared 63% year over year last quarter. Moreover, STEM expects to start generating positive EBITDA, excluding certain items, in the second half of the year. The shares have a very low forward price to sales ratio of just over 1 at the moment. The valuation is especially attractive given the company's rapid growth and the fact that it's closing in on profitability. So this is another article I thought was really interesting right here. STEM powers Hungary's biggest solar power plant with AI. STEM recently announced that its solar monitoring and optimization solutions are operational now in Hungary's largest solar power plant, Mazosat. I'm not sure how to pronounce that, so I apologize if I'm making that sound rough. It also states right here, this is the company's 5th utility scale project in Hungary and strengthens its leadership in Eastern Europe. The 304 megawatt DC power plant uses STEM's Athena platform, which includes Also Energy's PowerTrack and Power Manager control solutions to reduce Hungary's dependence on natural gas and increase renewable energy production. Very interesting, very exciting right there. So let's see here. STEM has seen success in its international strategy with the activation of clean energy assets, especially as Europe prepares for the Net Zero Industry Act. It looks forward to delivering value and support for more clean energy projects in existing and expanding markets. STEM benefits from a strong portfolio of AI-driven clean software and services. Improvement in supply chain issues, labor shortages, and related regulatory actions have been driving the top line. So yeah, that's that first quarter, 63% year over year increase in revenue, 67 million. Storage services revenues increased 22% sequentially, and solar services revenues were up 7% sequentially. So yeah, that is very all exciting right there. This is a way that a lot of companies are trying to go to. Companies, renewable energy, green, going green, be green. And previously, a lot of things with green energy and things, people just looked at it as, oh, expensive. Oh yeah, I want to do that, but it's expensive. And companies were still doing it because, sometimes because of regulatory, laws and things like that, were making them do it. But if you can do it and also cut costs and also save money or not be as expensive, that's a no-brainer. Of course, companies are going to do it, So you're able to capitalize on both trends and long-term efforts right there. So that's going to be really interesting to see right there with STEM. And that's going to be it with my analysis, review, and overview video of STEM stock, ticker symbol STEM. Like I stated, very exciting company. They're doing some very interesting things, working with some major corporations, and the stock, like, it's moved around, definitely bounced around, was a part of that SPAC, run up and then run down, and it's kind of been leveling off in some areas, facing resistance, trying to find support, and trading underneath the moving average, above the moving average, just, all over the place. And this year has definitely been a very interesting year for many stocks right here. And it is, it's part of that kind of hype, as far as like with the AI. It did make a run up during some of the run up with Nvidia and all that you saw on the charts. What was that? When was that really going off? Like, Nvidia really bounced up at one point. I think it was probably right around here in May, June, something like that or whatever. So yeah, STEM definitely rode up for sure. Coming down a little bit. Who knows where it's going to land or go up or anything like that. But it's definitely a part of that AI topic, that news, that headline, AI, artificial intelligence. But it's not just a flash in the pan or a keyword for STEM. It's not just a little part of their company. It's not just like, oh yeah, we're doing AI in this little part of our company. AI is a main aspect of STEM's company, of their corporation. Artificial intelligence, machine learning is one of the main drivers of their growth, of the way their company operates. So like, this is built. This is, that's why I'm saying, like, this is why it excites me, because it's not just like, yeah, we're adding AI because, it's going to make our stock go up. And, some companies are really adding AI for several reasons, and it will make their stock go, it has made their stock go up, and it's going to make their company more efficient, everything like that. AI is just so ingrained in STEM and Athena that, it's really exciting. But yeah, so that is it with my video on STEM, ticker symbol STEM. Hope you all enjoyed the video. Take care.